Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Dee Carter. He's president of the Carter Financial Group. Plus, got a new book coming out here soon. It's Now or Never: How to Enjoy Your Life and Not Let Your Investments Own You. How about that? Dee, welcome to Traders Nation. How are you today?
It's good to be with you again. It's great. In fact, the book came out in July on Amazon.com, and it's done very, very well.
Nice.
We're very pleased with the way it's come.
Awesome. All right, head on over to Amazon.com, get a copy today. We'll talk about the tail end also, Dee.
Sure.
Hey, listen, so crude oil prices sharply lower on worries over signs of the economic slowdown in China. What's going on there, Dee?
Well, I think what we're seeing, too, and I think the price of West Texas Intermediate today is up to around $57 a barrel, which is about a 2 or 3% increase over the last couple of days. So it's coming back up, and I think part of that reason is because China just put forward a plan to eliminate its trade surplus with the United States, and I think there's a lot of things kind of hinging on that. We're looking at actually oil is at a 2-month high right now. Oil prices are. I think we're looking at some of that right now, Eric. I don't know that it's going to make that much difference because what we're seeing is a glut of oil right now. We've got more oil than we can use.
Yeah.
We don't have any place to stockpile what we're actually taking out of the ground.
Sure.
And the refineries are overloaded, and we don't, as you know, we don't have enough refineries in this country to take care of the problem.
Sure.
So we're sitting here watching what takes place, the trade situation with China, what's going on with OPEC. OPEC is almost stepped into a minor role lately, with a couple of with Iran and Iraq situation going on, with Russia pushing the Crimean thing real big, and Russia's become a bigger player in that market now. Even though they're not a member of OPEC, they're starting to be like the tail wagging the dog in a lot of ways in Europe. So we got a lot of things going on that are going to affect the price of oil and where it's going over the next, I think, 6 months to a year.
Sure. With the Russians, real quickly, they do a lot of gas, though, don't they? Aren't they majority gas?
They do a lot of gas over there, and their big problem with gas is like everyone else's, and that's trying to vent it, find a place to put it, trying to get it pipelined. And so, but they have a lot of natural gas. But they're moving up big on the oil field, in the oil field area, in the oil area. So they've become a bigger player right now. Right.
And so let's talk about refineries, because you mentioned that. I still don't get it. I don't know why we don't have enough refineries, unless, I can see, like, during this periods where it costs more to take it out of the ground, so they leave it in the ground, so therefore the refineries that we have in place are adequate. But you get in times like this to where, we're pulling it out like crazy. We're selling this oil, and we're selling the crude on the world market, and they're buying it like crazy too. And any thoughts in maybe bumping up another refinery, bring another one online or something?
The biggest problem we've had with refinery development has been the restrictions provided by our, God bless them, our government. We've had so many restrictions and regulations about building refineries that no one wanted to take the bit in the teeth, if you will, and go ahead and build a new refinery. However, some of those regulations have been relaxed with the Trump administration. We're seeing, in fact, there is a rumor of a new refinery starting to be built in New Mexico, not far from Midland. So that would be a great outlet. Right now, we're stuck with Houston primarily. We have one in Big Spring, Texas, but it stays at top capacity because it's a small refinery. And we have one in Oklahoma that we ship to. But we don't have the pipelines out of Midland. This is crazy. Midland is in the middle of the Permian Basin, which is now basically, with the new discoveries we've had, the only people that produce more oil than we do now are the United Arab Republic, if you will, the Arab Emirates, and we're creeping up on Iran, actually. So we've become the number 4 producer in the whole world is oil. But we don't have pipelines to get it to the refineries. So we're doing 2 new pipelines. They're reversing one pipeline, which is interesting, that used to flow from gasoline from the Houston area to Midland, a 36-incher, and they're reversing it to put crude in it to send back to that same refinery. So they're doing a lot of things with it right now, Eric, but it's going to be a long time before some of this stuff take place, and we'll make a real big change in the market, I think.
I think that's so important for our country. Even if a refinery goes out or 2, we've got to have something to fall back onto. That redundancy, okay?
And you're right.
We got to have it, and the infrastructure to move that around. It doesn't do us any good if we can refine it, but we can't move it.
Our biggest problem in West Texas right now, if you try to drive anywhere, we drove to Abilene, which is only 150 miles away.
Yeah.
We drove to Abilene on Saturday, and I don't know how many oil carrying trucks we passed and met on the highway. Interstate 20 is under construction almost constantly, and it's because of the traffic. The truck traffic in West Texas is tearing up the highway. So we're literally, we have an infrastructure problem, we have a pipeline problem, we have regulation problem.
Right.
All these things are leading to a buildup of a glut of oil right now that we just don't have any place to put.
Well, and real quickly, because I don't want to just beat it to death, but certainly with the regulations in building, I think with this administration, we got to get that infrastructure in place. We cut some of that red tape out of the way, then we can start building, because it was the red tape that prevented people from actually being able to even break ground to build.
Absolutely, absolutely. The regulations just to get started were unbelievably large, but they have been removed to a large extent. So I think you're going to see some entrepreneurs that are going to take some investment money and put into the pipeline areas and also into refineries that will make the movement of the oil to the coast where it can be shipped out. We've become now, as you know, an exporter instead of an importer.
Yeah, I love it.
We now export, and I love it. That's what the man promised. I remember a former president, if I remember correctly, saying, how's he going to do that? Does he have a magic wand? Well, I guess he does, because he did it.
Yeah, he certainly did. I hate being at the mercy of any foreign entity, especially a terrorist government, Iran. We just cannot be at anybody's mercy. Even friends. We can't be at our friends' mercy. We have to have our own reliance, especially when it comes to energy. If that's gone, we're standing still. Not good at all. So you talked about the roads, a lot of trucks going on. Any of the traders concerned about oversaturating the market with crude?
They're really not, and the reason is because it's a long-term commodity. It's not something that's going to be here and gone tomorrow. With the regulations, I mean, the Energy Department is putting regulations on wind and solar and everything else. They're trying everything in the world to do it. But the oil industry is going to be around. I don't care what AOC says, bless her little pointed head. We're going to be around for a long time. She's not going to be able to do away with the petroleum industry, and if she does, she better get ready to find some other way to button her blouse and zip her skirt, because that's where the petroleum industry comes in. They make buttons and zippers too, as well as gasoline.
It makes me wonder if she even knows that. Let's talk about it.
I'm sure she doesn't.
Yeah, that's right. We're almost out of time. I want to talk about a positive note here. Certainly, consumers, we're going to see lower costs with fuel-related products because it takes fuel to get products to the store shelves. Lower gas prices at the pump. We're going to see that consumers on the consumer side.
I think so. I think we're going to see that down the road, because I don't think oil. I remember we talked about a year ago, and somebody was talking about $85 to $100 barrel oil, and I told you then that would not happen, and I was right, and it went through the way I said it was going to go. Now I'm saying that we're not going to see. I don't think we're going to see $70 oil this year, but if we do, it will be because of the opening up of some of areas that we haven't opened up previously to now. I think we're going to see a price cut. I think the prices are going to go down because we do have a glut. And the consumer's going to read it. They're going to see it at the pump. They're going to see gasoline prices go down. Gasoline prices have gone down 30 and 40 cents a gallon already just in the last year. So we're seeing that taking place now, which is great for the consumer. And we've got plenty of oil out here in West Texas. We don't worry about it. $57 a barrel of oil. There's a lot of guys walking down the streets that are millionaires.
That's right. And I'm loving it. That's what it's all about. So let me ask you. We're out of time. I'll have to ask you on the next edition of Traders Nation. So, Dee, you can get a copy of Dee's book. It's Now or Never: How to Enjoy Your Life and Not Let Your Investments Own You, over there at Amazon.com or your local bookstore. Dee, you got a website we can find you at?
Just go to DeeCarterFinancial.com and you'll be able to get all the information you need.
All right, head on over there today. Dee, as always, appreciate your time here today.
You bet. Thanks for calling, buddy.
You bet. All right, stay tuned. We'll be right back.